Both Bitcoin and the traditional market are losing key structures. Look at how Ethereum has broken this streak and the way it has done so. The list could go on forever. Look at BNB, look at Solana, how it has lost its defense zone. We could also talk about Cardano's Black Swan, Polkadot, and the traditional market like the SHIB 500 and even the Nasdaq. Are we now announcing the end of the crypto bull run? Are we facing the equivalent of November 2021, when we said the bullish party might be coming to an end? Look at how in previous videos from Crypto Insight going back 2 months, video after video, we were explaining and sharing that it was wise to remain optimistic about the crypto ecosystem. Look at this thumbnail where we said the bull run was imminent, and then we followed up confirming and stating that the bull run was underway. Not to mention how positive we've been over the past 2 months, video after video. But today is the day Crypto Insight is not going to be positive. It's one thing to hear this from any other technical analysis or crypto channel, as you know, often lack deep understanding of the subject. It's another thing entirely to hear it from Crypto Insight. You'll recall that in November 2021, when Bitcoin was around $67,000, based on price structure and entirely different reasons than today, we were already saying that the prudent move at the time was to stop buying and even start harvesting gains. Alright, in this video, I'm going to explain why, here at Crypto Insight in December 2024, we're feeling the same way we did back in November 2021. This is no trivial matter, so it's worth understanding why we think this way. Let's start by looking at the traditional market. We've recently seen some very positive gains, but now we're witnessing the breakdown of a wedge that's been compressing for quite some time. What's important here is the sheer force and intensity with which that wedge has been broken. Look at the volume, quite significant, especially for the SHIB 500. This comes after the news where the Fed challenges incoming President Donald Trump, suggesting that his policies are likely to fuel inflation in the short to medium term. As a result, the Fed's inflation outlook has worsened, and so have the expectations for interest rate adjustments. This type of news serves as a catalyst, and the major institutions that manipulate financial markets have used it to trigger the wedge breakdown. Now we're seeing the price fighting for its life against this structure. In other words, if the price ends up losing this structure, we could say a short-term bearish period for the traditional market is confirmed. To be fair, in the case of the SHIB 500, nothing is fully confirmed yet. Let's be clear about that. But as you know, in this space, the winners are those who anticipate the moves. That's just how things work. And that's why we work hard every single day to try and stay ahead of the curve. What do we have here on the Nasdaq chart in the 4-hour time frame? It's more of the same, an aggressive wedge that kept tightening and gained significant momentum. All of this, of course, served as a catalyst for a climactic bullish move in both the SHIB 500 and the Nasdaq, driven by the announcement of Donald Trump as president. Financial markets initially interpreted this as positive, and it was reflected in the price action. What we believe is that this initial news was used as a climax, a trap to absorb long positions fueled by the FOMO of investors reacting to Trump's victory. Then, when the Fed acted and spoke for the first time regarding its monetary and inflationary policy post-election, institutions used that catalyst to initiate aggressive market-wide selling. What we might be witnessing now is a rotation phase. We're talking about traditional financial markets here, but as you know, traditional markets and cryptocurrencies are closely connected. There's a clear correlation. That's precisely why today we're analyzing traditional markets. It's essential to understand them to cross-reference with crypto and Bitcoin. Now, looking at the Nasdaq, the wedge is breaking, and there's plenty of room for a drop. It's an easy move for the price to head toward its trend line. The question is whether in the future they plan to break it and initiate a medium-term bearish trend. Let's be clear, we're not saying a financial crisis is coming to traditional markets, not at all. We're simply discussing the possibility of starting a medium-term bearish phase. Take a moment to understand what a medium-term bearish phase means. Here's an example. Notice how it's not the end of the world. We could point to several examples of corrections like this. One was in August 2022, a medium-term bearish phase. As you can see, these moves in traditional markets don't signify a catastrophe. Something more extreme, like what began in November 2021, would be a different story, but that's not what we're talking about here. We're not predicting the start of a financial crisis, just the potential for a medium-term bearish move, so no need to panic, but we are indeed bearish on traditional markets. Now, let's talk about the link between traditional markets and cryptocurrencies. It's none other than the assets already trading on the Nasdaq, not just trading on the Nasdaq, that's been the case for a while, but being part of the Nasdaq index itself. Well, this stock is MicroStrategy, and as you already know, we've been talking about the excessive decoupling we've observed with MicroStrategy. If we compare this range of movement and use it as the baseline or calibration, we can see how Bitcoin only reached this level. But look at how far MicroStrategy climbed. At that point, we already identified a clear overextension in MicroStrategy, driven of course by FOMO. And you know exactly what major institutions do with these kinds of overextensions. They're unnatural. They don't make sense. Ultimately, it's dumb money, stupid money. I hope you didn't buy your MicroStrategy at the top here. But if you've been following Crypto Insight, I'm confident you wouldn't even consider buying at this level. So with MicroStrategy clearly overextended, there's no doubt institutions have taken advantage of the FOMO surrounding the announcement that MicroStrategy is now part of the Nasdaq index. While retail investors see this news as a positive positive for the stock. Institutions have used it as a catalyst to absorb buying pressure. And these purchases were already, let's be honest, overextended, which we've been pointing out in our analysis of MicroStrategy. Now, similar to the SHIB 500, MicroStrategy hasn't yet lost its critical boundary. But as I said, this is about speculation and trying to stay ahead of the curve. Naturally, in speculation and in our attempts to anticipate, we may make mistakes. That's entirely plausible and human. But what you value here is our ability to identify these shifts in dynamics ahead of time. So, essentially, we're betting that MicroStrategy will lose its defense zone sooner or later. Will it happen immediately? Will it take some time? Honestly, we don't know. But what we're already seeing is some buyer weakness. It's running out of steam. All the overextension from long positions has been absorbed, along with the positive news of MicroStrategy's inclusion in the Nasdaq index. Now, let's talk about what you love, cryptocurrencies. What do we think is going to happen here? And why do we believe it's a very bad time to buy? This is something we already mentioned in the previous video. Buying crypto for the long term right now. Bad idea. We made that clear in the last video. As I showed you earlier, for 2 consecutive months, we've been saying, video after video, that cryptocurrencies were going to keep rising. It's been absolutely insane, just as you've seen, but now, for the first time in the past 2 months, after being positive throughout this entire rally, we're telling you that we are no longer bullish. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
let me explain why. Take a look. This is the Bitcoin daily chart. I already talked about this in the last video published on the channel. If we calculate the target of this reaccumulation, we understand how institutions manipulate prices at will. We know exactly how far they aim to extract profits from a reaccumulation process like this one. We did the calculation the other day and showed how smart money has already hit its target with pinpoint precision. You can find this in the video we published 2 days ago. We discussed how it seemed plausible that profits were taken at this level. Not only that, but we also measured a harmonic pattern. In these macro timeframes, we take harmonic patterns very seriously because we know how price behaves in these types of moves. Now, look at the harmonic projection. Where does it point? What a coincidence, it's pointing exactly to the same target as the reaccumulation. In a moment, we'll talk about cross-analysis, what we're seeing in Ethereum and other altcoins. When we bring all of this together, the idea doesn't just add up, it multiplies. But just looking at Bitcoin on its own, one thing is clear. In the last video we published 2 days ago, I remember recording it and feeling tempted to be more direct or even more bearish. But we decided to stay cautious, to wait for certain confirmations in the ecosystem that would give us stronger validation. Now, we're ready to say it, we are no longer bullish. That's why in the last video we said, hey, we're still positive, but we've got a red flag. We explained what we'd need to see for things to change in the future. And look, it's been just one video, and we're already telling you the narrative has completely shifted. We could have said this 2 days ago, but we try not to act like Nostradamus. Instead, we aim to work with more confirmation. Now, let me tell you something. I believe we're already doing our best to anticipate these shifts and a lot. That said, of course, we could be wrong. But here's something to reflect on. If you've been buying spot positions, whether from this lower zone during the reaccumulation or anywhere along this upward move, as we've been positive throughout, as you've seen in our YouTube videos, and if you've been following Crypto Insight and taking long-term buying positions, as many of you have, here's the takeaway. The message is very clear, and I want to simplify it. Right now, you don't buy. There's no need to buy anymore. In fact, we'd go further and say that if you're holding long positions from lower levels or anywhere during the rally, it would be wise and prudent to start taking profits. And look, if the price ends up collapsing afterward, you'll have been cautious, and you won't be left regretting your decisions. On the other hand, and this is possible, we could be wrong. Absolutely. If the price instead starts working the structure in a very methodical way, and it makes us reassess the situation, maybe the bull run isn't over. Then, in the future, we could look for an opportunity to re-enter. Here's a practical example. Let's say you've wisely entered a long position, for example, at the close of this candle. Now, imagine you ride this move, close your position here, and then you see the price keeps going up. You think, damn, I messed up. Well, let me tell you, relax. We'll look for some structure, some way to re-enter the movement if we end up being wrong. Because this isn't about trying to be Nostradamus or guessing what's going to happen. What we do here is manage risk, and that's something you really need to understand. If you're investing in stocks or crypto, you are a risk manager. And right now, as of today, December 20th, 2024, we're in a moment where long-term, long-side operations in crypto carry significant risk. This isn't about spreading fear, not at all. We're simply sharing what we see. see. And at the same time, we're saying, hey, we're human. If things change, don't worry. We'll see it, we'll let you know, and we'll look for a way to re-enter the market. Of course, we're talking about long-term operations here. Day trading or futures trading is a completely different story, where we buy or sell within the same day, and the dynamics are entirely different. For now, let's focus solely on the long-term outlook. But first, let me remind you that registration for our private channel, Crypto Insight Premium, is still open. In this exclusive space, we provide daily live technical analysis of the market, along with updates that we believe are key to staying informed. It's also a place where we share trading ideas and feedback, allowing us to grow as a community and continue learning every day. Signing up is very simple. The requirements are as follows. You need to be a user of BitUnix or buy DFI, have deposited cryptocurrencies into your BitUnix or buy DFI accounts with a minimum value of $100, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. Don't miss this unique opportunity to become part of our exclusive Crypto Insight Premium community. Come join us, we're waiting for you. So yes, we're seeing that Bitcoin has reached its second institutional target, the end of the second harmonic. And if we zoom into the 4-hour chart, we can already see the signs of a potential black swan event unfolding. But look at the other assets. Take Ethereum, for example. It's an absolute disaster, to put it plainly. Here we've got its Z pattern, its wedge, and this is the guideline of that Z pattern, which has now been breached. No matter how you look at it, that's a black swan event. So friends, let's exercise caution. Instead of looking up, let's prioritize looking down. You'll see the same situation with BNB. It's been working a Z pattern, a wedge, which is already broken. The structure is now established. It's been testing a typical defense zone before continuing, and now it's fighting to lose that defense zone. If this ends up being confirmed, as I was saying, a bearish market for the short to medium term will be a very real possibility and something we need to have at the forefront. And now, take a look at Solana. If we first go to the one-day chart, you'll notice how Solana reached its all-time high, and in fact, it even made a new one. From there, we've marked this horizontal line. Now, if we zoom in a bit, what we'll see is how, at the same time, I'm not going to redraw everything from the other day, but this here is a complex corrective pattern. This is a wedge. It was broken, and we were observing where that potential defense zone might be to support a bullish continuation hypothesis. What we've seen is that it has been broken with significant force. And honestly, as I mentioned earlier, caution doesn't suggest being optimistic here, it suggests being negative. We're losing key levels. Now, if you look at Cardano on the daily time frame, what you're seeing is a macro defense zone. You think about how up here we've witnessed distribution. Look at the price, how it exploded upward to test that zone, and it respected it. Not only that, but if we calculate the institutional target for this massive accumulation, look at the second target. Wow, how perfectly it aligns with the excess, hitting it with precision down to the millimeter. This is why I'm telling you that we're crossing all this analysis from altcoins, Bitcoin, and even the traditional markets. And this is where we see, if we go to the 4-hour time frame, for example, the massive black swan event on Cardano, it was the one that anticipated the move before anyone else. Seeing this break, this drop, my friend, it hurts. When institutions decide to make a move, they're not going to give you a slap on the wrist, they're going to hit you with a hard punch right in the stomach. And this black swan is like a full-on body shot from Ilia to Puria, right in your gut. Now, look at Polkadot. Notice how the price has also come down to test a clear defense zone. Sure, it had a nice rally, but let's switch to the 4-hour chart. What's happening here? Look at this. See how it rallied with strength. Look at the wide range of movement. Now, notice this. If that big rally is the older brother, then here you've got the middle brother, then the younger brother, and finally the newborn baby. Tell me, what's happening to the buying strength? What do you think? Is it gaining momentum, or is it weakening? We're just pointing out what we see in the charts, but you can draw your own conclusions. And here we see an aggressive break, full on Ilia to Puria punch. It's getting hard to keep a positive outlook on this. It's tough. Now, take XRP. It had a massive, crazy rally, a total explosion. And back then, we identified a defense zone to watch. It's fascinating because we see how they set up a trap here. And now, XRP can't afford to lose even a centimeter of that zone. We see that the price is threatening it, and it might even be attempting a retest now. We're in an area of extreme danger, and at this point, I'll tell you the same thing I always say. Well, do we have a guarantee of everything we're telling you? Honestly, no, we don't have a guarantee. As I mentioned earlier, we're human and we can make mistakes in our interpretation, right? And in the next few days, we might see something that makes us think more positively or something that leads us to think differently. But as I said, this is about being risk managers. Right now, we see risk. If we're good at anticipating and maintaining a bullish position over the last 2 months, as you've seen in the YouTube videos, video after video, if you're good at positioning yourself, I think it's smart to realize that if we're at risk right now, well, I'm not here to be a futurist. I'll leave that to some other crazy person. I just want to know when it's risky to hold on to a well-positioned buy. And right now, it's a terrible time to want to hold it. But if in the future the market tells us something completely different, as I was saying earlier, as we've been doing over the last 2 months, we'll find a way to re-enter what could be a pause. So we're not trying to predict, we're trying to manage. Now, Tell me, how do you manage your risk? Let me know in the comments. And if you like this advanced technical analysis, where we really do know what we're talking about, support the channel by liking this video, subscribing, and clicking the bell so YouTube can notify you of future posts. Good luck with your trades, and see you next time.